Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, October 7th, just after the markets closed. Well, as you probably know by now, Wall Street fell sharply today after a solid jobs report for September increased the likelihood the Federal Reserve will move forward with an interest rate hiking campaign. Many feel that will push the U.S. economy into a recession. So the market fell hard today. Of course, they never go down forever, but let's look at three charts that could give us some insight into the week to come. First of all, as we always do, we're going to check out a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our S&P 500 index. Now, over here, you can see that the SPY closed today at $362.79. That's about 24% below the SPY's last all-time closing high. You can't see it on this chart, actually. It was on January 3rd at $477.71. Now, we already know what happened this year. It fell from that high at $477.71 in January down to February lows, then it jumped back up, and then it fell back down to May lows, jumped back up, then fell back down to our famous June lows, the June low. Very, very, well, we were watching it for a long time now, fell down to $362. Or a little over 3,600 on the S&P 500 itself. So that low is we've been watching since June. Then it consolidated here, then made a really nice run up, back up to the 200-day moving average right here, the black line at $431. And as I've discussed with you before, this looked like, all right, the pain is over. However, it's a very steep angle to this move up. Of course, when you get moves down like this, there's always a lot of short covering involved. And when the buyers start buying and the shorts have to cover by buying to get out of their positions, then you've got buying from both ends. And then the stock or asset, whatever you're trading, will jump up pretty strongly sometimes. So we got up to the 200-day moving average, and then it was look out below. We fell down from there down to right about 390, which completed the prophecy here of this little head and shoulders, fell down to about 390, then jumped up, and look at the short covering here along with the buying. Everybody goes, all right, well, that was the bottom, and then guess not, the SPY fell back below the red line, the 20-day moving average, back below the green line, the 50-day moving average, the 20 crossed over the 50, which our next chart today, as we usually do, we're looking at a daily chart of the Invesco QQQ, symbol QQQ. This represents the NASDAQ 100, the top 100 non-financial stocks in the NASDAQ stock market. It's a major index. Top holdings include Apple, Amazon, Tesla, Netflix, Microsoft, that whole group. So as we know here, today it closed at $269.10. It's trading at 33% below. It's in a bear market, just like the SPY. When you get below 20% from an all-time high, you're in a bear market. So it fell down. It fell from its all-time closing high back in November 19. On November 19th, and that was back last year in 2020 at 403. That was the all-time high. So it has fallen down ever since that November high at 403. It has gradually moved down, bounced up like the SPY did in March of this year, and then fell down to its lows here, June 16th lows at 269. So that was the lows we've been watching, the June lows for the QQQ, and it managed to start back up. And like the SPY, of course, even more rambunctious. It always is, because tech stocks are always rambunctious than the solid S&P guys. But that's good. You can make more money. You just have to be careful. But we went in a very steep rise here, back up to rallied to 334 right here on August 16th, but notice it couldn't get all the way to its 200-day moving average like the SPY did. So it was losing a little steam here, even though it wasn't evident. It was losing some steam, a lot of short covering back down here. Then it fell pretty dramatically down to the September 30th low at $267.10 back here September 30th, just the end of last week. So it's bounced up a little bit early this week, and then fell back down today. Back down to close again, as I said, at 269 and 10 cents. So we're looking at this low here at 267. Of course, we're closing very close to it today at 269. Now, if you look at a long-term chart of a QQQ, again, like I like to do, you will see that the Qs have support from the last quarter in 2020. There's key support there at 264 to 260. So this whole area here is important. 264 to 260, that's important. We're at 269 right now. We were at 267. So if the SPY does it, and if the Qs break below this last low that we had a few days ago, if they break below these lows, then we look for another leg down. So please, 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 if you have to trade, please use patience and trade very carefully. I myself am on the sidelines. Oh, except for the commodities that we talked about last week, wheat, and there's some others like corn. But other than that, I'm on the sidelines. That's where I'm comfortable right now. Our third chart today, we're going to look, and we've looked at it before. There really wasn't a lot to choose from today. The market's very, very cranky. A lot of charts don't look good, but it's okay. The market has a long-term bias to the upside. We're going to have a ton of good things to nibble on when the bottom is in, but until then, we need to exercise patience. This is another commodity, but it is not a commodities ETF. It is the Global X Silver Miners ETF, symbol SIL. This is a daily chart. The SIL has 38 holdings, wheat and precious metals, some of the top ones, Pan American Silver, Hecla Mining, SSR Mining. Silver is a commodity, of course. It's a metal, precious metal, but it's also used in industry. So I'm kind of watching it here for some reasons. I went back to a long-term chart of this SIL. The all-time high was in April 2011 at $94. So that's where it was back then in April 2011. Then it gradually, over the 11 years, it gradually fell. And it fell to a recent low right here of, hold on, I'm looking for the number here, on September 26th at $21.26. So that happens to be, that level there, that 21.22 level is a key support level, and it goes back to 2020, 2019, and 2018. So if you go back, you'll see on the longer term chart, you'll see that level acting as support and silver moving up from it right in here over and over again. Doesn't mean it's going to happen again. That's what protective stops are for. But I thought it was kind of interesting. So it did close today just above the green line, the 50-day moving average. It's above the 20-day. These two are inverse right now. But it is above the 50-day. Very few charts can say that right now. It is above the 20-day. And so going to be patient here, if in the coming week the SIL stays above $23 right down here, if it can stay above $23, which is right around here somewhere, I may add the shares of the SIL to my trading portfolio. My initial stop is going to be $22 because of this low right here. So I will put my stop at $22. If you want to raise yours, if you want to get in the trade and raise yours higher, that's fine too. That's just, I'm not going to buy very much, so I'm not going to take a big hit if it does go below it. But if it acts correctly and stays above, again, $23, I may add some shares to my trading portfolio. My initial stop will be at $22. Then, or if SIL rises above $27, I may add more shares to my position. So you may want to keep an eye on the SIL in the coming week. So finally, while the market is deciding what to do next, this is a perfect time to take some time to invest in yourself and invest in your trading skills. You might want to take a few minutes right now to check out my online training programs and see how you can become a better trader. These programs include our flagship training, 7 Steps to Successful Trading, how to swing trade successfully, how to trade the trend to profits, which again is going to be invaluable when this market starts up again. For novices, how to read charts, 3 winning setups, very low priced and very good training products, and bottom fish like a pro. As we know, when we get a bottom here, this is going to be also an invaluable training. So to see all of my online training programs, simply go to the link on this screen up here. You'll have to put that in, or simply click on the orange button below. So you guys, please be careful out there. Please be careful. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.